Hello everyone, this is Yash Nama. Thank you for joining me on this video. The purpose of this video is to help you understand cost allocation in a simple and easy manner. In order to understand cost allocation concepts, I would like to revert back to our Candy's coffee shop example. I hope you remember Candy from our earlier videos. Candy is a fictitious university student who recently set up a coffee shop at her university premises. In this coffee shop, she sells coffees, cakes, donuts, sandwiches, and so on. Now, let us say Candy's coffee shop started doing well and became very popular. The cakes being sold at Candy's coffee shop became popular. People liked those cakes a lot. And what Candy decides to do is that, you know what, maybe I should try and expand my cakes business. So like, are you all familiar with this Krispy Kreme donuts? Krispy Kreme donuts? I mean, you can get those Krispy Kreme donuts not only in the Krispy Kreme outlets, but I think there are also some 7-Eleven stores and other supermarkets which have Krispy Kreme donuts, right? So Candy says that, you know what, maybe I should follow a similar model. I'll sell cakes not only in my coffee shop, but I'll also set up a separate cakes division, which will produce cakes and supply for my coffee shop, but they'll also produce cakes and sell cakes to be housed in other supermarkets. Okay? So she negotiates, let's say, with Coles, Woolworths, 7-Eleven, Aldi, whatever, and makes sure that there is a small counter with Candy's cakes, right? So now she sets up a separate cakes division. And, you know, she also sets up a donuts division. So Candy's coffee shop has donuts, cakes, coffees, sandwiches, whatnot. So she also sets up a donuts division, which produces and supplies cakes not only for the coffee shop, but it also produces and supplies donuts for supermarkets, right? So there is a donuts shelf from Candy's coffee shop in, let's say, a couple of supermarkets, and that's what Candy does, right? So this was, so now, earlier she only had the coffee shop, but now she has got three businesses, so to say, three divisions: coffee shop, cakes, and donuts. Now, because the business is expanding, right? Because the business is expanding, she employs a manager for each of her divisions, because she is also a full-time student, so she does not have enough time to, you know, undertake full-time studies at the same time manage three divisions, right? It gets complicated, so she decides to employ full-time managers to head these divisions. So let's say she employs Jandy, Sandy, and Pondy as managers, heads of divisions for coffee, cakes, and donuts. And let us say, I'll talk about a little about the number of staff. So let's say coffee shop has 6 staff, cakes division has 8 staff, donuts division has 10 staff. Now, because the business has increased in size and scale, you know, there are at least, you know, 27 employees, including the managers. So she decides that she will need a separate HR division to take care of the contracts and health and well-being of all these employees. So she sets up a separate HR division. She sets up a separate accounting and information systems division because the business has expanded. There's so much billing happening. There's so much, you know, receipts and payments and salaries and whatnot. So she decides that she will need a separate accounting and information systems department. And she decides to also have a separate cleaning department. And what the cleaning department does is basically, after each round of cooking and baking the cakes division, they would go out and make sure that the ovens are clean and ready for the next round of cooking. And they would also help donuts division for the same thing. After each round of baking, they will make sure that they will go and clean the oven and make sure that the oven's ready for the next round of baking. And they would also supply manpower to the coffee shop so that they can take care of the cleaning of the tables and whatnot after serving each customer, right? So now they've got Candy's Coffee Shop has 6 divisions. Earlier, she only had the coffee shop, 1 division, but now they've got 6 divisions, okay? So obviously, it's a different scenario, much different scenario now. Now let us say, I'll just hide this one for a minute, and let's assume when it was just coffee shop, right? When it was just coffee shop, if Candy had to come up with the selling price for her cakes or coffees or donuts or etc., what would Candy have done? Candy would have looked at her direct costs, like whatever goes into preparing the cakes, donuts, and coffees. She might have taken into consideration some of the indirect manufacturing costs, right? So chef salaries, electricity, water, rents, whatnot, right? And might have come up with a total cost, divided that by the estimated number of units of each category, and then somehow might have come up with the cost per unit, may have added a profit margin on top of it, and then would have come up with the selling price. Let's assume that this was the exercise she might have undertaken to come up with the selling price for her products. But now things would change. Now things would change because the number of divisions are more. How would things change? Firstly, is coffee shop offering products and services and generating revenue? Yes or no? Yes. Is the cakes division offering products and services and generating revenue? Yes. How about donuts? Yes. The HR division, are they offering services? Yes, they're offering services, but are they generating revenue on their own? No. So HR division is there to help the employees of all the other divisions. So they'll take care of the contracts, health and well-being of all the other divisions, but they're not generating any revenue on their own. Accounting and information systems. They are taking care of the receivables, payables, billing of all the other divisions, but they're not generating any revenue on their own. Cleaning division. Cleaning division is helping cakes, donuts, and coffee shop with their cleaning services, maybe to some extent of HR and accounting as well, in terms of cleaning their, let's say, carpeted area or whatnot. So they're helping all other divisions in their cleaning requirements, but they're not generating any revenue on their own. Okay? Now, this is the reason we would classify coffee, cakes, and donuts as operating divisions, and we would classify HR, accounting, and cleaning as support divisions. Operating divisions have products or services of their own, and they are generating their own revenue. Okay? And support divisions are helping the other divisions in their day-to-day running of the business. They help other divisions earn revenue, but they do not have their own stream of revenue. Right? So they are there to help other divisions work better, right? So they are the support divisions. They do not have their own stream of revenue. Okay? Now, for Candy's Coffee Shop to be profitable, is it enough for the operating divisions to cover their own costs? Meaning, is it enough for the operating divisions to generate enough revenue to cover their own costs? Or do we expect that the operating divisions generate enough revenue so that they can also cover the costs of these support divisions which are helping them? because for the entire company or business to be profitable, Candy's coffee shop to be profitable, we need to make sure that these operating divisions are generating so much revenue that they are able to cover not only their own costs, but they are able to also cover the costs of these HR, accounting, and cleaning divisions, which are created to help them generate their revenue. Right? So it is important now, because the business has expanded, that these operating divisions make sure that they earn enough revenue to cover not only their own costs, but also the cost of the support divisions. HR division has, 2 employees. I'll just put number of staff. Accounting has 2 employees, and cleaning division has 8 employees. Okay, let's see. Now let us say for an accounting period, for a fictitious accounting period, the total cost of the HR division is 300,000, 250,000. Total cost of the accounting division, let's say, is 350,000. Total cost of the cleaning division, let's say, is, let's say 400,000. Okay. Now, for a fictitious accounting period, I've given you the costs of these 3 divisions as 250, 350, and 400,000. Now, what did we say the idea is? The idea is that we have to make sure that the operating divisions, coffee, cakes, and donuts, generate enough revenue so that they cover not only their own costs, but they also have to cover the costs of these support departments. Okay. Now, in order to identify how much money should coffee division make, coffee division should have an idea of not only their own costs, which they will probably have a reasonable idea of, but they also need to know how much of these costs of the support divisions they have to pay. Because we can ask, the total of these 3 divisions is 1 million. Now we can split the total cost of these 3 support departments, 1 million, equally, for instance, to coffee, cakes, and donuts. We can try and do that. But Jandy, Sandy, Pondy may or may not be happy about this proposal, who are the division heads, managers of operating divisions. Because Candy has advised Jandy, Sandy, and Pondy that in order to incentivize them to generate good business and make the business profitable, what Candy said to Jandy, Sandy, and Pondy was that the more profit you give me, I'll give you a bonus. High profit, higher bonus. Some percentage of profit is their bonus. So obviously, Jandy, Sandy, and Pondy are excited about this proposal. They want to make sure that they generate as much profit as possible. And obviously, in order to generate as much profit as possible for their own divisions, they want to make sure that their own division's revenue is high and their own division's cost is low as possible so that they can get higher profit and higher bonus. That's the idea. So whether Jandy, Sandy, and Pondy will be happy about this proposal of splitting these costs equally between the 3 divisions depends on how much services coffee shop is getting out of HR, how much services coffee shop is getting out of accounting, how much services coffee shop is getting out of cleaning. Okay? Now let us say accounting costs. I'll talk about number of transactions. How many transactions do you think may happen in a coffee shop, during an hour? 100 transactions in an hour? That's not unreasonable. That's fairly possible. 100 transactions in an hour, yeah? Because you're selling coffees and, if you go to Starbucks, how many transactions might be happening in an hour? It could be a lot more, but I'm just 100 is not an unreasonable estimate. All I'm trying to say is this, okay? Let's say 100 an hour times 8 hours a day times 5 days a week times 52 weeks. 208,000 transactions. Okay? What did I do? 100 transactions a day times, an hour times 8 hours a day times 5 days a week times 52 weeks. That's how I made up this number. So these are all made up numbers, okay? Cakes division. What does cakes division do? Cakes division supplies cakes to the coffee shop, but they also supply cakes to supermarkets. Will supermarkets be queuing up at the cakes division and buying cakes every minute, hour? They'd be making bulk orders, right? So if supermarkets have to buy cakes, they buy maybe, I don't know, they buy cakes for 3 or 4 days or for a week until the useful life of, or the shelf life of these cakes might be, so that, they probably might be making 1 order or 2 orders each week. Let us say the number of orders of the cakes division was 50,000 in a year. Or maybe even 25 might do, or 20 might do, let's say. And similarly, let's say the donuts division, because they again supply to supermarkets, their number of transactions will be lower, 250,000. Now let us say we have to decide how much of accounting costs must be paid by coffee shop, how much of accounting costs must be paid by cakes, and how much of accounting costs must be paid by donuts. One possible way, let us say, what is cost driver? Anything which increases or decreases cost is cost driver. We can try and assume that cost driver for AIS is number of transactions. How many transactions are there in total? Cost driver quantity is equal to sum of the number of transactions. Okay? How much is the total cost? Actually, I'll move this here. Total cost of accounting division is 350,000. Cost driver rate, I can say 350,000 upon number of transactions will give me $1.38 per transaction. So I've got a basis now to split the accounting costs between the 3 divisions. So one possible way is this. Now I'm saying allocation of Ais costs. What I'm doing is I'm making the cost of accounting department 0. I'm making it 0. I deduct 350,000 from the cost of accounting department. I would want to split this 350,000 between coffee, cakes, and donuts divisions at 1.38 per transaction. So is equal to this number times number of transactions. Cost driver rate times number of transactions. Okay. So if we did this, this would increase the cost of coffee shop by $287,000. This would increase the cost of cakes division by $27,668, and this would increase the cost of the donuts division by $34,500. What do you think might be the reactions of Jandy, Sandy, and Pondy? If you're Jandy, would you be happy with this proposal? So what I've done here is I've split the cost of accounting division 350,000 between the 3 divisions, 3 operating divisions, on the basis of number of transactions. What I did, I took the total cost 350,000, divided it by the total number of transactions 253,000. I got a rate 1.38. I multiplied this rate with these 3 number of transactions for the 3 divisions, and I got these cost numbers. So let's say if we were to look at fairness perspective, right? if we have to look at fairness perspective, is this fair allocation? Let's say you're Jandy and you want to find out a basis which says this is unfair. You want to make a logical argument, you're Jandy, you want to make a logical argument that this is unfair. How can you do this? Think about it because it impacts your bonus. If you look at each invoice in a coffee shop, how many line items they might have? A cappuccino and a sandwich, a cappuccino or a mocha and a cake. I'm saying that each invoice might have 2 line items in a coffee shop, at the most 3 maybe. 1 to 3 line items per invoice. On the contrary, each invoice of the cakes division who is supplying to supermarkets, for instance, each sale by cakes division to supermarkets might have 5 strawberry cakes, 5 banana cakes, 5, chocolate cakes, 5 vanilla cakes, and 5 carrot cakes. So number of line items per invoice, per transaction is higher for cakes and donuts. So how much time do you think might involve in, say, dealing with each invoice for the accounting department? Dealing with each invoice of coffee shop might be quicker. On the contrary, dealing with each invoice of cakes and donuts divisions might be much more complicated. They might even have some refunds and returns and, order cancellations and whatnot, which might not even be happening in coffee shop because it's a very simple transaction. You buy, you pay for your coffee, and you disappear shortly, right? So in that sense, the amount of work involved per transaction. So I'll put here line items per invoice, and I'll say instead of transactions, I'll probably rename it as number of invoices. Okay? Number of line items per invoice on average can be 2. Here it could be, 20, 25, let's say, or 15, let's say. Yeah. Now, if I work out total line items will be 208 times 2, 416. So I have so many line items for these divisions. Now, if I did the same allocation but on this basis, if I say cost driver quantity is number of line items, total line items is equal to, how much is total line items? This much. Cost driver rate. I would take total cost of accounting divided by total line items, it would be 30 cents per line item. And if I use this as a basis of allocating accounting costs, how would I do it? Number of line items. How about this? Is this more fair? More logical? Better split? What we're trying to find out is a logical way of splitting costs between these divisions, splitting support department costs to the operating departments. Does this make sense? Yeah? So, now if you're operating managers, this is why you need to know accounting, because your bonus might be based on some number, or your department cost might be based on some number, because you might always have allocations and you might not have any control over these allocations because you can't tell how these guys are spending their costs. You might be running your own department like a tight ship. You might be very efficient with your own departments, but if you have a chunk of costs coming from other divisions, which is impacting your costs, A, you don't have control over how they are spending their costs, but it's being allocated to you. And B, you may or may not have a say about how the costs are being allocated, but at least you should know how it works. And if possible, you must argue against or for a certain logic. And this is why we need to know this, right? Does this make sense? Now, what we've got here is single or uniform cost driver rate. What I've given you examples are for single or uniform cost driver rate. And what did I do here? I took the total cost and divided it by one cost driver, one basis, to get a cost driver rate. I'll give you here example of a dual cost driver rate. So let us say this 350,000, I'll give you the details here. This 350,000 so they've got two accountants and they're paying each accountant, let's say $80,000 in annual salary. Okay? But they also have a manager, and the manager is paid, let's say, $90,000 salary. Of the 350, 250 are salaries, and the rest are other variable costs, let's say. Or actually, let me add one more line item. Let's say software subscription. Let's say they're paying $50,000 for accounting software each month, each year, and the rest $50,000 is other variable costs which increase or decrease based on the number of transactions. Okay? Now, we can split the fixed costs and variable costs differently. Because variable costs increase or decrease with the number of transactions, whereas fixed costs, software subscription, salary of accountants and managers do not change irrespective of the level of output. So we can come up with a dual rate method. Dual rate. So I can say fixed costs are how much, fixed costs are this much, and variable costs are 50,000. So I can have a different cost driver for fixed cost, and I can have a different cost driver for variable cost. And let us say for the variable cost, I use line items as the cost driver, and cost driver rate would be 4 cents per line item for variable costs. And let us say fixed costs, we can say split equally between the three departments. So let's say number of divisions is 3. So we will split $100,000 equally fixed costs and variable costs 4 cents per line item. And if we did this on a dual allocation of Ais costs, dual rate. So I'll hide the single rate for a minute so that I can make this bigger for you. So fixed costs variable costs 4 cents per line item times number of line items, total line items. In this case, the total allocation would be this. Okay? Okay, so we already saw a single rate method and a dual rate method, and different possible ways. I mean, I already showed you 3 different ways in which we can allocate accounting costs between the 3 divisions. Right? So obviously, depending upon the method of allocating, depending upon the method you choose, you may have a different number allocated to each division.
I hope this video was useful in understanding the basics of cost allocation. Please feel free to email me if you have any questions. Take care and goodbye.